What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 41. It's August the 7th, 2023. We made some trades today, so let's get into it. So first and foremost, let's talk about all of our important levels that we have on the chart today. So you can't see it, but yesterday's closing price is down here off the chart at 35,307. Now, we passed by yesterday's closing price as soon as the market opened, and we never looked back. So that level won't play too much of a role, not today. So let's start our analysis today at the open. So we did open at yesterday's closing price, but then we shot straight up to the upside like we've been doing for a lot of these days over these past few months this summer. And eventually we established a swing high, and then we came back to retest what used to be a previous level of a higher low. So we came back to retest the support. So that led me to trade one, where I went long here as prices came back to retest the higher low. I cut the trade for a small loss as it turned negative. What I learned on that trade is to take the first entry, and that's something that I've been trying to instill in myself for these past few weeks, because what I've been noticing is that the first opportunity that you have to take your setup is usually the one that you should take, because there are more people in the market that are participating at that time, which makes it more likely for your order to actually work out and be successful, and you can have a good trade. But when you try and take it on the second attempt, it's just not as many participants, which just decreases the chances of that trade working for you. So that's something that I'm still kind of bumping my head against, but something I can work on and get better at for sure. And that's the biggest lesson I learned at trade one. Take the first entry and avoid the second entry. Just skip it. There's going to be plenty of opportunity all day long, so you don't have to feel obligated to just take the trade if you feel like you missed it. You can always wait and be patient, and patience pays off. So what's interesting is that we see prices come all the way back down to retest what used to be a previous level of support. Now this level is so interesting to me because this is one of the main reasons I titled this video a deeper discussion on the importance of high volume candles, because today was a perfect day for us to see the relationships between these high volume candles and why they're important. So let's go ahead and get into that. Now notice how prices came back to this level of support, right? You will probably think to yourself, what is the reason that prices just reverse at this specific level? Because if you follow it across, it's not a distinct price. It's like 360 something. It's not 350 or 375 or something like that, where you can clearly say, oh, okay, that's why it turned around. But if you follow this level of support, this blue line across, look at where we get to. We get to this high volume candle that we had established at the open of the market today, where we have this ellipse down here in the volume column. Now, when it comes to a high volume candle tells you so much, and it gives you so much information in the market that you can use to your advantage going forward in the future. One of the first things that volume candle tells you is that a large number of orders and contracts were done on this candle between these prices that candle covered. So that's telling you up front that one of these prices that this candle touched, or at least a group of these prices that this candle touched or passed through, is going to be a very important level that more than likely, if we see prices come back to again, we'll see a reaction. Either we'll see continuation from whatever move was happening, or we'll see a reversal from whatever pullback might have been occurring at that time. But more than likely, we'll definitely see some type of reaction off of that level. So that's one of the first things that the volume candle tells you. The next thing that it tells you is that people are highly invested around whatever group of prices cover this specific candle. Think about it. If it was a lot of contracts traded at one price, and we had a large candle like we did on this 930 candle, that means that from what we're seeing, the majority of the people in this market went long. So think about if you were a long trader and you were trading a day like today, and you were aware of the fact that we've been in a strong uptrend on the longer term picture for pretty much an entire season, all summer. You would probably say, okay, if I went long right here, I'm probably looking to add to my position as the day progresses on, and then eventually hold that until I get to whatever profit target I want to get to. So it's a lot of traders in the market thinking like that, and that's one of the biggest reasons you have a reaction when you get back to levels like that. And what's even more interesting is that not only did we establish that level on high volume at 930, but when we came back into this level after this entire sell-off from this swing high all the way back down to support. Look at where we came in at. We came in on higher volume as soon as we got back down to that level. So everybody, no, not everybody, but a lot of participants that were participating over here in the market are still putting orders in over here. And based on the price action and the volume, we can assume that most of the people that were participating down here were going long. And that's the reason that prices reversed, because it was way more demand at this level than it was supply. And we see the reversal happen after that. So the volume is very important. And those are the two things I want to touch on that happened between trades 1 and 2. But it's a lot more volume candles, as you can see. And we'll get into those also as we go throughout today's session. So after we bounced off support, we see prices come back up to retest what used to be the support level of the higher low, but is now acting as resistance. And we see prices pull back and create a higher low. So once we get this higher low right here, my strategy went into play. So whenever I see a higher low, I look to circle it up, draw a level of support on it, and then go long as prices come back into that level. So on trade 2, that's exactly what I was able to do. I went long here as prices came back to retest the support of the higher low. So as soon as I saw prices hit the level, I saw prices move away in my direction. And as soon as I saw that confirmation, I went long and just took prices back up to what used to be previous lower high right here where trade number 1 was located. So the same entry price that I went long from at trade 1 is the same price that I got out at on trade 2. So then we see a little small micro double top that led prices back down to retest that level of support that we made on higher volume down there, which is very important because that's telling us a general story of what's going on in the market. We saw buyers initially establish their level of support at 9:30 in the market, at 9:30 in the morning when the market opened. We saw them come back, retest that level, and then confirm that they did want that level to be support. And then we see prices come back down one more time, like, hey, let's just test it one last time just to make sure that y'all really want to go long today. And of course, we saw support right there. And what's even more interesting is that not only did we come down to that level on higher volume like we did before, but we didn't even reach that level of support like we did previously. We initially just eventually stopped at this wick for this candle right here. So that's telling you that the sellers didn't even have enough strength to push prices all the way back down to support because the buyers stepped in early and they were like, look, we know exactly what we want to do. We're buying down here, and that's that. So we see prices push up, create a higher low right here. I tried to get in off of this entry, but it never really came back to give me that retest that I was looking for. But that's okay. You know, sometimes when it comes to those higher lows, you'll have scenarios where the market will give you a retest, but you'll also have scenarios like this where the higher low gets established and then prices continue moving and they don't come back for you. But in those situations, you don't chase the market. You just wait for your next best opportunity, because if the trend is up, then more than likely you'll probably have another higher low that you can look to go long from. So that brings us to our next important volume candle on the chart, which is this candle that occurs around 10:10 this morning. So if we follow that up, that pretty much aligns with this large range candle that we see right here. So let's go ahead and break this down and talk about volume candles and what you can look for. So whenever you have a volume candle like this, like I told you before, you can use the volume candle as a reference point, right? But it doesn't always have to be that candle that you use, because sometimes the candle can be so large that, let's look at this candle for example. It goes from 450 to 420. It's a 30-point candle. So it'll be hard to determine which levels and which prices within that candle range are really the most important. So what you do is, whenever you're in a situation like that, you look to the next candle to the right, and you can use that one as your reference point, because more than likely that second candle will tell you exactly where all of your important levels are. So if you follow this second candle up right here, right, look at that. And then let's follow this across. Look at what that lines up with. That lines up with a level of support that held up in the market for the next hour. And this level tried to get broken through multiple times. We had a lot of selling that came back to this level, but no matter what happened, we still stayed above that level. And even later on, when we actually broke through that level, we eventually came back and got right back onto the uptrend, and we saw higher highs and higher lows. So you can use that second candle as a reference point. Now, don't always just assume that it's going to be the highest price for that candle or the closing price or the open price. It could be anything within that candle. So it could be the open, the closing price, the highest wick, or the lowest wick. It depends on the scenario. So you don't ever want to just say it's going to be this specific one of those four. You just got to read the market and see where the market is trying to test and then move accordingly. But that second candle is very lucrative, and this is another example why. So moving on past the volume discussion, we see prices come up, create a swing high. Now, one more thing, another thing that you can do is draw up a zone based around that high volume candle. And that's the reason that I drew this zone. I drew this zone from the bottom of the second candle wick after we saw that first high volume candle. And then I made the top of the zone this swing high that got established. Now, looking back on it, this wasn't the best zone to use, but there will be scenarios where you can take the entire candle off of a high volume bar and use it for your zone, and it'll match up perfectly where prices don't break above that zone or below it for like the next 30 to 40 minutes. Now, not today, but going forward in the future, always remember that, because I've seen that happen a lot of times in the market. So let's continue moving on. So we see our higher low get established as we pulled away from the swing high that we made at the top of the zone. And then we see prices come back, break out of the zone, establish another higher low. And then, of course, that's where I look to go long. So I went long here as prices came back to retest the higher low on trade number 3. But the thing was, I didn't like how the price action was playing out, so I cut the trade, and that was a good decision right there. And I say that because whenever you get into a trade where you're using this higher low strategy, more than likely you should see the market start moving in your favor immediately. The better it moves in your favor, the quicker that it does, the better that it'll be for you in terms of the probability of your trade being successful. But when you take that first trade and you see prices kind of play around at that level, for the first minute, if it doesn't move, it's all good. But when it comes to a minute and a half, 2 minutes later, and you're still not seeing that immediate reaction that you wanted, in my experience, I've learned to just get out of the trade, because a lot of times if you don't see that buy-in coming in as soon as prices come back to retest that level of support, that means that the buyers are hesitating. So if the buyers are hesitating, that means that I don't necessarily want to be in that move right now, because I'm only getting in and buying at this higher low support level because I thought that all of y'all were going to buy it too. But if y'all are not going long, I'm like, hey, don't leave me out here by myself. So I just cut the trade in situations like those and try and protect myself from losses, because a lot of times when the buyers just don't show up, well, if the market is not going up, if you were long, more than likely you'll probably think about getting out, kind of like I did. So if everybody is getting out and they're not buying, that means they're selling, which means we could see a pullback fairly soon. Now, in today's scenario, that was not the case. This was one of those scenarios where you cut the trade because you felt uneasy about it, but it still went your way. And you got to understand that in the market, sometimes that's just how it's going to play out. You will protect yourself from losses on some occasions, but then on some occasions, you'll see the prices go right back to hit what your initial target would have been. But the thing is, you got to accept that. You can't fight that and try and take a revenge trade and go long at higher prices or go long at the second entry instead of the first entry. You just got to accept the fact that you took your best possible trade. It didn't work out the way you expected it to, but you didn't lose anything on it because you got stopped out at break even or for a small gain. So you got to remember that when it comes to cutting your trades early. Yeah, you'll protect yourself a lot of times, but there will be some times where you miss out. But that's part of the game, and you got to roll with it. So as we move on, we come back and we see prices retest that support level that we were talking about that was established from that second candle off of that high volume right before we saw trade number 3. That level is still holding up. So once we see prices continue moving higher, we come into trade 4 after we establish this higher low. So at this higher low, yep, of course, I went long and looked to take prices a little bit further up to the upside. The only thing right here was that when you go long towards the highest prices of the day, it doesn't mean that it won't work ever, but the chances of it having success, they vary from day to day, honestly. Like on some sessions, the market will just keep going, but then on other sessions, the market will kind of just stall out, pull back, and then make that move. And today was actually one of those days where it stalled out. Now, I'm still trying to figure out and learn the difference, the biggest difference between days where the market continues to move when it's at higher prices and days where the market decides to pull back, reset, and then reclaim and come back to test those higher prices one more time. So I'm still trying to figure that out. And when I do, I'll be back on the stream to tell you guys about it. But one thing that I did learn that can protect you from that, even if you don't know whether or not it's going to be a day where it continues or whether or not it pulls back, if you see prices go in your favor and then snap back to the downside, go in your favor again, and then come back to your entry price, you just got to get out. And that's exactly what I saw on trade 4, because when I got in, let's zoom in a little bit so we can see. All right. So when I went long on candle number 4, on trade number 4, I went long at the blue triangle. Now on this very next candle, we see prices come down, create a long tail wick to the downside, but they close in a positive territory. So I've actually seen this move 2 times last week. The first time I saw it, I didn't really understand it, but the second time I saw it, it was the very next day after, which I believe was Friday. So that's day 40. Check that video out. Check that video out if you haven't already. But once I saw this long tail candle wick and it closed like that, I was like, okay, I know exactly what I'm looking at. So all I needed was follow through. If that next candle was green after this one, I would have went long or added to my position or just stayed in the position that I had. But once I saw that long tail candle wick have a red candle immediately after, I was like, oh no. Because anytime you see a long tail candle wick, it's 2 extremes that can happen pretty much. Either you see continuation or you see a sharp reversal. So if you see prices start to reverse and move back down, you definitely want to get back out. So I think that right there is a lesson that I took away from trade number 4 that kind of just helped me avoid these losses, because if I would have stayed in this trade at trade number 4, I would have definitely got stopped out as prices came back to the bottom of the zone once more. So after trade 4, we see prices come back, retest that level again of resistance. This level held up for a good amount of time. It's held up from around 10:30 to around, what is that, 11:20. So almost an hour, this level of resistance held up. And we'll talk about that a lot more at trade number 5. So let's go ahead and get to that. So come back, retest resistance, come back to that level that we established from that second candle after that one first high volume candle. Once again, that level is holding up. We see our higher low get established right here. We come back, retest that level. Now, I skipped this entry because I just wasn't quite sure. Anytime that I've gone long towards the middle of the zone, it just hasn't worked out for me. Now, granted, this isn't the perfect zone, and it wasn't really a zone that I drew based off of price action. It was more so just kind of trying to force the zone based off of that second candle wick. But even still, if the prices were in the zone, I'm not really trying to go long right there. So I skipped that entry. But eventually we did see that trade worked, and we saw prices come back up to retest resistance one more time. We formed a little micro double top, which I'm looking at right now. But when I was looking at this in real time, I actually saw this entire setup as a higher low, because we pushed higher, pulled back, and then we moved up. So I circled that, drew my level of support, and then I looked to go long as prices came back into that, and that's what I did at 5. But the only thing was, this was the same trade as trade number 4, and I got the same results. And one of the lessons that I've been learning in the market is that whenever you have a trade from a certain level in a certain direction and you have a certain result, like let's say the trade was a loss, if you come back a little bit later and take that same trade from that same level in that same direction, you can't be mad if you get the same results, because you literally just did the same thing that you did before. Now, I've had days where trade 4 would be a winning trade, and then when prices come back up, you take that same trade again and it's positive. As a matter of fact, that's the same thing that happened on August 4th. That was Friday. So if you look at trade 2, I went long at the bottom of the zone and then took prices back up to resistance. Now, when prices came back up into the zone after this downswing, I went long at that same price again and took it back up to the same place. So that's a day where you do the same thing and it works for you. But if it didn't work for you the first time and you do it the second time, you should expect the same results, more than likely. And That's the biggest lesson I took away from trade number 5. Saw prices come all the way back down to the bottom of the zone, and I got stopped out. Learned my lesson though. But then after that, we see something very interesting happen, which I've kind of been trying to learn and trying to, well, really just learn how to avoid this. I would say learn how to trade, but from my experience, it's just better to not participate in the pullbacks when you have a very strong trend. And in this scenario, we do see a triple top up here at boom, boom, and boom. Then we have a lower high get formed right below the support level of what used to be a previous higher low. So that makes sense. Now this is acting as resistance. Okay, cool. We see prices push back down. They don't create a lower low, but they do. Well, excuse me. Wait, hold on. Don't create a lower low. No, they didn't create a lower low. No, but they did create another lower high. So if you compare it, we started here. This was our next lower high, and this was the next one. So we're making lower highs. So I said, okay, I'm understanding what we're seeing, because I've learned that when it comes to trading a pullback and you're looking for the trend to kind of reverse, you don't want to trade the first one that you see, which is one of the main reasons why I wasn't going short right here when we had this. You could consider this a lower high or an equal high. It doesn't matter. Kind of similar. But definitely this one was a lower high. I didn't go short right there, or at this little double top micro retest, or at this lower high either. I thought about going short right there, but I was like, nah, if the trend is up, then I'm just going to look to go long all day, and I'm not going to switch it up. But once we had these lower highs that started to form, I started to say, okay, this is not the first, it's not the first pullback of the day. So I should be good to short as long as I see the correct price action. But even still, sometimes even the second pullback won't be good enough for you to expect a reversal, even if you see all of the price action signs, because that's the tricky part about it. When I see lower lows and lower highs, I'm looking to go short, and I usually say I'm looking to go short no matter what's going on. But that's not the mindset I should have. I should look to go short, but then I should also consider what the overall bigger market picture is. And that's something that I learned last week too, and kind of repeating that mistake, that's not good. But hey, you got to learn somehow, some way. But no matter what the price action might do and how appealing it might look, you have to fight those urges to go against the market trend. The pullback is the pullback. You don't have to participate. Because see, you could make money on these pullbacks on the short side, but ask yourself this question: would it be easier in this market to make money by shorting, or would it be easier to make money by going long? I want to take the easiest route. I don't want to make it harder than it already has to be for myself. So I'm like, okay, from this point forward, just trade with the trend, and whatever urges you have, fight them. It comes down to discipline. You got to resist those urges to do the wrong thing, even though it feels so right. And that's the biggest thing I learned at trade 6. And also, when it comes to trade 6, I could have got out for a smaller loss once I saw this higher low get formed, but I was like, nah, if the trend has been moving down, I feel like this might be a fake out of a higher low. But that just wasn't the case, and that's what I took away from trade 6. So I learned some really good lessons right there that I can take forward in the future. So once we get past trade 6, we see prices break out of the zone, come back, establish a higher low. So I don't have it circled up, but let's zoom in and check it out anyway. So this little one small red body candle constitutes a higher low. And sometimes when you have a really strong uptrend, your higher low might only be one candle. It might not be a long drawn out higher low that lasts for 2, 3, 4, 5, 6, 7 and something candles. It could just be one and done. And that's what we saw right here. So we see the higher low get formed. We see prices come back to retest the level of that higher low, retest the support level. And that's where I got into trade 7 and I got into trade 8. So let's read the notes right here. I went long at the support of the higher low, and then I held this trade until I saw exhaustion volume. So there we go. Let's get back onto the volume train and talk about that a little bit more and talk about why these high volume candles are so important. Not only can you use them as a reference point for your entry, but you can also use them as a reference point for your exits. Now, in this market, I was expecting for prices to eventually break past this level of resistance, and I expected for the uptrend to continue. So my initial thought was to look for a higher low towards the top level of resistance, which is what I was trying to do at 5 and what I was trying to do at 4, but I finally got it right on 7 and 8. And I'm like, okay, once you catch that trade, you can hold it, because usually once you break past that high for the day, after you've had a little bit of time to give the market a break to rest and give everybody time to think about what they really want to do, you'll see a continuous movement throughout the day to the upside. And that's what we've been seeing over these past 2 to 3 weeks. So I'm like, okay, that's kind of what we're setting up to see today. So instead of holding this trade at trade number 8 to my scalp target, which would have been at the top of resistance normally, I said, you know what, let me just hold this trade until I see a selling signal. And that comes back to the volume. Whenever you see a high volume candle, you could also kind of, based on the context of the market, you could assume that that might be the high for that potential swing that you're looking at. And that's called exhaustion volume. And it basically means that everybody that wants to go long has already done so. So if there's no more buyers in the market, then that means, for the most part, like I was talking about earlier, the buyers that are long right now are going to start taking profit, and that's going to cause a wave of selling to come in. And that's what exhaustion volume represents. So if you look at this candle that I got out on, I exited at this orange triangle right here. So let's follow that all the way down. And when we follow that down, we see it's associated with this high volume bar right here. Wait, hold on. Let's get it right. And you know what? Let's go to the live chart so I can get the crosshairs on here real quick. Okay, so 7 and 8. Okay, there's the volume bars we were looking at. Okay, so this was the first one. Okay, even more interesting. That's perfect. So look at how this first volume candle, look at where it closes at, and follow that across. It closes at resistance, and that's where we see a large influx of volume come in. So most of the time, in order for you to break past a major level on any chart, whether it's support or resistance, you usually have to have some momentum that's going to come into the market to be able to push prices past that level. Because think of all the people that are going to add to the selling pressure down here, well, up here, because they're taking profit. So it has to be a wave of buying strong enough to overtake all of those selling orders up there and push prices higher. And then once you push prices higher, you're going to get all of the people who were trying to short resistance, thinking that it was going to hold up once again. All of their stops are going to be hit. And if you're short and your stop gets hit, you have to buy your position back, which only adds to the wave of buying that's coming in. So that's usually how levels like that get broken. So for us to see high volume as we come back into that level is significant once again. So then notice this next volume candle right here is the high volume candle that I was talking about before. So when I'm in this trade, I'm thinking, I'm like, that's the high volume candle. More than likely, that's telling me that the move is about to come to an end, especially once you saw a high volume candle less than 5 minutes before. That's showing you that the market is coming in and buyers are having just waves and waves and waves. But money is not an infinite resource. Everybody has a certain amount of trading capital that they can use. So there's only so much buying that people can do in the overall market. So when you see these waves of buying starting to come in, and you see that you're towards the top of an upswing, that's kind of telling you that more than likely it's going to be a pullback soon, because people got to take profits. And if nobody else is buying, that's probably where everybody else is going to start to say, okay, let me get out right here because the market isn't moving higher anymore. So that's what I was thinking on this candle right here. But you don't necessarily just want to get out because you see that exhaustion volume candle. The next thing that you want to think about is what major levels are around this high volume candle that we just made. So if we look at this candle, the close for this candle was 509. And then if you move up, to me, I use the quarters level theory. So the 500 levels, the 525, 550, 575, 600, 625, so forth and so on. All of those levels make a big difference. And if I'm anywhere near those price levels, that's usually where I'll try and get out at. So that's the level that I was aiming for, because I said if resistance is down here towards 500, right, a little bit earlier, we couldn't break past 500. So I'm like, if we do get back up to that level and we push through it, the next level that makes sense that we should move up to is that next quarter level above, which is 525. So once we started pushing up towards that level, this candle actually did not get there. Hold on, where was that? Oh man, moving too fast. Let me go ahead and lock these real quick though. Okay. Okay, where was I? So yeah, this candle actually never came up to test 525. The high for this candle was only 522. But what I've learned throughout a lot of experience throughout the market is that sometimes when you're aiming for that level, it's not going to be a perfect touch where it comes directly to 525 and lets you get out of your trade and then it stops. The reason that this happens is because you got people in the market like me that have been so traumatized by seeing prices turn around 4 points before their profit target and come back and stop them out at break even. They're so traumatized by that they start taking profits earlier. So instead of waiting for prices to come back up to 25, people might start selling out at 19, 20, 21, 22, 23, things of that nature. And that's kind of really what I did too, because I said if 25 is the level, I don't feel like the trader that has to get every single point out of the market. If it's close enough, that's good enough for me. And then also, whenever you see the top of an upswing, so at this candle, this was the top of the swing, and at one point in time, this candle was all the way green at the top of the wick at 522 and closed at 518. So if you see the highest price at that time period, so let's just scroll back and pretend like none of that happened after occurred yet. So if this is what you were seeing, you were like, wow, we had a move from 430 all the way up to 520. I mean, if I participated and we're at the highs, wouldn't that be the best point to get out? Because you could always say that the market could move higher in the future, but you don't know that in real time. But you know that in that moment, you're seeing the highest price that you've seen so far. So that's a good place to get out. So those were all of the reasons that I use and all of the criteria that I use to take the exit right there. And I was able to lock in a nice 44-point gain. So not too bad. One of my best trades so far over these past couple of weeks. And after that, I just decided to call it a day. So overall, man, I think I did a pretty good job today. You know, I followed the trend, I stuck to my strategy, and I just did what I know works. I think some of the losses that I've been taking over the past couple of weeks, I wouldn't say they were terrible losses. They were just losses on trades where the setup wasn't as good as I would have preferred for it to be. But I would say today, all of the setups that I took, aside from trade 6, all of the setups that I took were pretty legit. And if I go back to my trading plan, I can pick out specific examples where I say, oh, okay, I was looking to trade this trade the way I traded this one in the past. So I think I did a good job on that. I think I still need to work on not trading those pullbacks in the trend though, because that's very important. Luckily today I was able to come back and make good profit after I took that loss. But on days like these where you have a strong trend, you could really go down the wrong path if you start trying to play that pullback. Because I know for me, I get into a cycle where if the first one didn't work, I was like, oh, well, I was just too early. I shorted in the middle of the zone, so I should short at the top of the zone when it gets there. And then you'll take 2 bad short trades in a row. So it's just a slippery slope that you really don't want to go down. And I've learned that the hard way. So that's one of the things I'm going to focus on tonight in my back testing session. I want to make sure that I can get that right. And that's pretty much all I got for you guys today. I hope you learned a lot about these high volume candles and how you can use them to your advantage, not only for your entry prices, but also for your exit prices. And I hope you guys learn to not trade against the trend and do not participate in that pullback. You don't have to. The market is going to go up, or if it's a down day, it's going to go down. But whatever the trend is, stick to that and make easy money. You don't have to make it harder than it has to be. So with that being said, I'll be back tomorrow on August 8th around 9:30, 9:40 a.m. If you didn't check out the live trade session for today, it's up right now on the Trading My Scalping Strategy playlist and in my live videos on my channel. So make sure you check that out. But other than that, man, I'll see you guys tomorrow. But until then, take it easy.